For more on the impact in the markets and for investors, let's now bring in Ellen Hazen, the chief market strategist and portfolio manager at FL Putnam Investment Management. Also, Meghan Shue, executive vice president and head of investment strategy at Wilmington Trust. You see her frequently. She's also a CNBC contributor, of course. Ladies, thank you very much for both being here. Let's start with the wall of worry comment I just threw out to Steve, because it sounds like this is a scenario where the markets could be constructively higher, Meghan, right, given the fact that there is uncertainty, but knowing that there is perhaps a pro-business friendly type environment coming in this next several months and years.
Yeah, absolutely. I think the trick is what is getting priced in today. And what we've seen from a very strong market return calendar year to date, as well as the post-election rally, is that our sense of it is that the market's very much focused on those business-friendly, positive sort of upside risks. And markets absolutely always have uncertainty, have a remarkable way of climbing a wall of worry. But there is more, I would say, asymmetric risk to the downside now, just given what is priced, given where valuations are, and the amount of uncertainty that is still to be had around some of those downside policy risks.
Ellen, what's been the biggest surprise or non-surprise for you as a portfolio manager, as an investment strategist, since the election date and its result?
What's really interesting is exactly what Meghan said, that there are some positive elements of the policies that have been put forth. So, for example, lighter regulation would help the energy sector. It might help manufacturing and materials. Lighter regulation would help the banks. And certainly if the FTC and the DOJ pull back on some of their antitrust efforts, then that could help investment banks, too. So there are clearly these pro-business initiatives. But at the same time, tariffs, no matter where they are, they'll be higher than they are today, and that will be inflationary. Making undocumented immigrants leave the country is likely going to be inflationary, too, particularly for those areas like leisure and hospitality, like agriculture, that are particularly dependent upon undocumented immigrants. And so that's going to be inflationary, too. And then finally, you look at the deficit, no taxes on tips, right? Maybe no taxes on Social Security. And so it's easy to see how inflation stays higher for longer with the deficit where it is. And the market seems to be very sanguine about everything when I actually think there are more risks than the market's pricing in.
I want to go back to the comments from Powell for a second. One of the things he said, Meghan, to Andrew, was that with the September cut, they wanted to send a strong signal that they would support the labor market if it kept weakening. And then he said the economy is strong and stronger than we thought it was going to be in September, which would tell you, okay, well, wait a minute, the door might be open to a pause. And yet, as Steve said, 75% odds of a cut this month, and they didn't change after those remarks. So I'm a little surprised at that dissonance.
Yeah, well, I think when we're looking at the economic data, this has been a very challenging period to understand really what's happening. You've had strikes, you've had storms, you've had seasonality issues, which I think play into labor market data as well as retail data. I mean, just think about the way that shopping behaviors have changed over the last few years. So the seasonality trend is challenging as well. And when you lump it all together, I think that's where you have to really use smoothing and look at the trend. Certainly in terms of some of the labor market data, it's come in more positive than expected. We are particularly focused on labor demand, so that would play into the job openings. And while that came in better than expected this week, the overall trend is, a bit of a frightening downward trajectory that if it does not sort of level out here, we would become concerned that that would start to show up in more layoffs. And we're not seeing layoffs. That's good. But certainly we're seeing some uptick in continuing